So in a summary of the testimony today on the highly shorted stocks, especially Gamestop, I mean, Gamestop's kind of the title company here, but really there was like 16 or so highly shorted stocks that were a part of this whole debacle that happened in January as far as trying to get the short squeeze to happen. We had a testimony today with the House. We were joined today with the Citadel Capital CEO, Reddit's co-founder, Robinhood CEO, and the Reddit trader, DFV, or Roaring Kitty, or Deep Effing Value, whatever you want to call him. He's the guy who turned like $54,000 into like $50 million at one point, and now it's probably down to like 20 million or so. But either way, turned about $50 million into about $20 million. And of course, we were joined by like, I don't even know, 100 House representatives, something like that. Maxine Walters, she started off by kind of saying the question of the day is the system, the stock market system, rigged against the individual investor? So the focus was kind of on that. And she wanted to know that because she said, paraphrasing, that it sure seems like the system is rigged against the individual, given the stops in trading that happened with the highly shorted stocks back in January. And so these House representatives were given the opportunity to ask some of the high-ranking members of those involved, and traders like DFV who were involved, to hear their opinions as to what was happening, get some clarification. So we started with some opening remarks. First was Representative Patrick McHenry. He just was talking about how the GameStop story represents a fundamental change in the investment environment. He was saying how traders have more information than they ever do. Things are faster, cheaper, easier to do than ever. And I mean, frankly, apps like Robinhood have made some of the steps towards making this a little bit easier and more accessible to everyone. Of course, the internet and the overall interest around investments has been, frankly, skyrocketing in recent past. I know even if you're just like scrolling on YouTube now or scrolling on TikTok, you just see way more stock market content than ever. Probably just because there's information out there. It's exciting, and we're in one of the biggest bull markets of all time. So it's kind of hard to be wrong when just about everyone's portfolios are in the green for the last year or multiple years. But he was also saying, this is Patrick McHenry, representative, he's also saying people were investing in protest, basically to fight the good fight of the little guy versus the big institutional guy, kind of fighting with your dollars to say like, hey, we know that you've been pushing down the little guy forever. We're going to do what we can to kind of fight back. And he basically just said individual investors should have the same opportunities as the big guys. And I think everyone agrees with that, except maybe, the small handful of actual big guys at the top who like things the way they are. But I think most people, every representative, it makes total sense. You should have the same access. Next, the next person who had some opening remarks was Brad Sherman, representative. These were all representatives because this was the House. He just talked about how we need to look at the gamification of the stock market, whether this is healthy, whether this is a natural progression of the way things are going. And he also said we need to look at what's going on with the 2-day clearinghouse waiting periods. Basically, why does it take 2 days for a stock transaction to settle in a time when pretty much everything happens instantly? I mean, you can be on your phone, order an Uber, and it's here in 5-10 minutes. Why does your stock have to take 2 days to settle? And given the technology we have, this should be at least feasible, or at least we should be able to work towards making that feasible. Next, we have Representative Al Green with some opening remarks. He mentioned how Citadel has paid over $100 million in penalties in the past several years. I think it was like $125 million. And he brought up some good points about how the risks of punishment should always exceed the rewards of doing wrong. And we've seen this in the news several times where Citadel has gotten in trouble for misreporting or giving misinformation on certain areas. They receive a fine, but the fine will be like a few $100,000. But who knows how much they made off of that misinformation, potentially billions of dollars. The founder of Citadel, it's worth something like $16 billion. Next, we had some opening remarks from the CEO of Robinhood, Vlad Tenev. He started off kind of just, it felt like a commercial for Robinhood. Frankly, he was just, saying the kind of the same things. If you ever heard him talk about how the financial system should be for everyone. Maxine Walters actually interrupted him as soon as he was kind of going into his Robinhood pitch. And said that he should just speak on what happened with limited trades at the end of January. And then he still just kind of spun that to focus pretty much all of his opening remarks on positives for what Robinhood does, which isn't a huge surprise. I'm sure he was completely addressed as to, how exactly to respond to questions. And kind of going through this testimony, we could see that the CEOs that were talking, with the exception of the Robinhood CEOs, just kind of did some, a lot of circle speaking, delays, long pauses, because each representative only has 5 minutes. If they take an extra 30 seconds to answer, that's much less time that they have to be grilled. If they say they don't understand the question, oh, there goes 20 seconds. If they answer the question correctly, oh, there goes 45 seconds. So we saw a lot of that for hours and hours and hours. And just a few people, honestly, 5-10 of them were really able to kind of twist things and eke out a few answers, kind of phrasing questions in almost tricky ways. I don't know if tricky is the right word, but in ways that kind of forced answers. So the CEO of Robinhood, still in his opening remarks, talked about how they paused trading on the days that they paused trading because the deposit requirements were 10 times more than normal trading days, and this caused some obvious financial issues for Robinhood and some risks as far as their balance sheet goes because of these highly shorted stocks. And he said he was not trying to help out hedge funds. You can decide whether that's true or not. And he said that 2-day trading period hurts investors and should be changed to real-time settlement, in his opinion. Next, we had some remarks from Ken Griffin, who's the CEO of Citadel. He's that like ultra rich Citadel Capital CEO worth like $16 billion or something like that. And he owns the company that processes the trades for, I think he said 40% of the retail trades in the United States. So obviously his company is very pivotal to the American financial system. And he was again kind of pitching services of Citadel in his opening remarks and talking about all the good things that he feels that they do. Next, we had Gabriel Plotkin, the Melvin Capital CEO. So Melvin Capital is a hedge fund that was one of the most, if not the most, held the most short positions out of any other institution or person against GameStop, and they were hurt badly because of this. Frankly, he wasn't really asked many questions throughout the entire testimony, and he didn't really have much to say. The questions he was asked, he would just say, I don't feel like that's in my realm of knowledge, things like that. But anyways, he opened his opening remarks where he says that their shorts were closed before trades were being limited on apps like Robinhood. So he's saying that their shorts were closed before something like the 28th of January, which would have meant that they lost a ton of money. Something important to note is that the Citadel Capital put in a significant investment into Melvin Capital right during this period of struggle. We don't really know how deep the connection goes between the two, but we know that Gabriel Plotkin used to work at Citadel Capital for a year when he was younger. But they didn't really share a whole lot of information about that. And Melvin suffered some serious losses, probably to the tune of a few $1 billion because of these short positions. And they've been shorting been shorting GameStop for at least 3 years, according to Gabriel Plotkin. And then we have some opening remarks from Steve Huffman, who's the co-founder of Reddit. We just have a couple more opening remarks. He talked about Reddit's mission, his pitch on Reddit. He talked about content moderation, including limiting hate and harassment on the platform. And he talked about how content gets promoted on Reddit and how it's a democratic system where every person just has, one vote, and this leads to only the best content reaching the top because there's this one vote system. Now, frankly, there are ways to gamify the Reddit system, but I'm not going to go into that too much on this summary. And then finally, we had some opening remarks from DFV, Roaring Kitty, Keith Gill, whatever you want to call him, the guy who made millions off of GameStop, the retail trader who's kind of like the force behind the GameStop frenzy. He basically just said he's happy to answer any questions about GameStop, and he had a poster behind him with a cat that just said "hang in there," and everyone was a big fan of that. He also talked about how he got a financial job at Mass Mutual, but he didn't have any clients. He wasn't in any situation where he was recommending stocks, or it just happened to be a financial job is what he was saying. And then we went into questions, and this was the bulk of it. I think there was probably about 6 or 7 hours worth of questions. Now, a lot of repeat questions and kind of asking the same thing, not really getting an answer. So let me just give you kind of the overview of some of the more important ones, the answers that we actually got. So Maxine Walters, who was leading this testimony, asked Tenev, she said, you said there was no liquidity problems, but had depository requirement issues. Did you have liquidity problems? So one thing Tenev was saying was, we don't have liquidity problems, but yet they didn't have money to cover all the buying positions of their clients. So she's like, well, did you have liquidity problems or not? Tenev said they didn't have liquidity problems and they didn't then. So I'm not sure exactly how that adds up, but that's what his answer was. And Maxine Walters wasn't happy with his answer. She's kind of a savage and went in on him a little bit. Robinhood has also paid a fine for inferior prices twice. And one of them was last summer. And she asked, is this in your customer's best interest? To which Tenev unfortunately didn't really answer. But of course, we know what the answer to that is. Next, we had Representative McHenry. He was asking Tenev, why did Robinhood restrict buying but not selling on the app? And I thought this was a great question. And Tenev said this was driven by deposit and collateral requirements, and that they didn't want to impose anti-selling orders to its customers because they felt that would be the worst of the two. Basically, if you make someone stuck in a position, they felt that that's worse than not letting someone jump into a position. The issue with that is letting people only sell allows them to be frantic and sell, and we know the way a stock moves is supply and demand. So if we have a bunch of people who are nervous on an extremely volatile stock and they think it's teetering at the top and might jump down, they're going to, of course, sell. And if no one can buy, there's no buying pressure. So the supply and demand equation is off. And it's almost like it goes artificially down, but then because it's going down, other people see it going down, they get out of their positions, and then it goes down further. So if it weren't for this, I mean, frankly, we could have seen prices in the thousands. Next, we had questions from Representative Carolyn Maloney. She asked Tenev, a lot of the questions were focused on him. She asked him, do you owe your customers more transparency? He unfortunately didn't really answer. We know the answer of that. What changes has Robinhood made to their trading platform? This was asked many times. I'm not sure why it was asked so many times, frankly. But he said they have an additional cushion with funding, with new funding that they're working on. And they have some basic changes with the app, more education resources. It kind of spun into another pitch of Robinhood. We next had some questions from Brad Sherman. He was asking, does a customer from Robinhood get a worse execution price than a customer from another brokerage like Fidelity? And this was a line of questions that we saw asked a lot, both to Citadel and Robinhood, the CEOs, about how these trades are processed. Ken Griffin answered he kind of danced around the question. Basically, the holdup is Robinhood gets paid by Citadel to have their trades processed by Citadel. But some brokerages don't get paid by Citadel. So there's a conflict of interest here where it would behoove Citadel to give the companies that they're not paying the best trades. So there's kind of an inherent issue there. And Brad Sherman he kind of went off a little bit on this and was saying, don't you see, what the issue is? And of course, Ken Griffin didn't really have much of an answer there. And also Brad Sherman said that he has found that this is the case when talking to other institutions and asking kind of just how does this process work, which logically it makes sense. A business is going to go with the option that earns them a little bit more money. Next, we have Representative Greg Meeks. He asked, why did you raise the $3 billion if you didn't have liquidity problems? Vlad said that this was to prepare for future events, future off events, basically like this one that we saw on the trading days of January 27th and 28th. And then back to payment order flow, which again was a question that was probably asked 50 times. And this went to Ken Griffin. They just wanted to know about quality purchases. Ken says that the system is overall good for customers, and they say that this helped drive the industry because of this payment to order flows. And payment for order flows is basically how Robinhood is able to have free trading, because it's basically the let's say you buy a stock for $10 on Robinhood. It says $10, you buy it for $10. That stock transaction gets sent to Citadel. Citadel finds that the stock is actually $9.90. What happens here is Citadel pockets some of that difference, and you, the investor, depending on the difference, might get a slightly lower share price. And that's something that Vlad talked about a few times, where they gave like $1 billion in price improvements in the last year. But that's how they make their money, on the little price differences between trades. And then because Citadel is able to do that and make money consistently, they pay back money to Robinhood. That's how Robinhood makes money. There were some additional questions to DFV. There wasn't very many questions for him. He still feels that GameStop is a good investment at the current prices in the $40 range. And that, of course, set off a little bit of frenzy on the stock price. Representative Velasquez says that disclosures are required for ownership of more than 5% of a company, but there's no disclosures required for shorting. She asked Marvin Capital CEO what he feels about that. And he said, basically, if that's the rules, I'll follow it. A little bit later on, they talked about how GameStop was shorted 100%, and they wanted to know, how is that not stock manipulation? And Marvin Capital CEO said that they only do legitimate shorts. And frankly, the answer of that is it could potentially be naked shorts, but there is ways to do that legally as well. Because when you short a stock, it creates what's called a synthetic long, and can just make the percentage of shorts higher than the percentage of float. It's not common, but it can happen. Representative Al Green said that the fines for doing things incorrectly, again, don't seem to outweigh the benefit of doing things wrong. They received $125 million in fines, but they made, like, I don't remember the exact number, $20 billion in revenue in that same period, and he thinks that things should be changed. DFV was asked about the value of GameStop, how he bought it at $5 a share, and what he thinks that it was valued at then, and he said that he thought it'd be valued at around $20 to $25 per share. And I wonder if that actually drove the share price of GameStop down a little bit, for those who are like, oh, it's only worth 20, 25 bucks. Because we saw at the end of the day, the share price for GameStop go down a little bit. There's another question. When did Melvin take a short position in GameStop? And the Melvin Capital CEO said that they actually took this position around 2017 and held that position the whole time until the beginning of 2021. Another question. What are your concerns about same-day stock transactions? This was a question to Ken Griffin. Basically, if we have 2-day settlement times right now for stocks, what are your concerns with instant settlements of trades? And he said that the biggest issue that he sees is it simply doesn't allow time to fix mistakes in transactions if it's happening real time. Vlad of Robinhood was asked why there are game features on the app, things like confetti, alerts, push notifications, tapping the app, thousands of times. If they claim that their goal is to help small long-term investors, but they have this conflict of interest where they get paid for transactions. So the question is, why do you do this? I thought it was a great question. However, didn't really receive a very great answer, or an answer at all for that matter. But it was something that was brought up nevertheless. Also, a representative talked about the incident with Alex Kearns, kind of with a passionate statement. And Alex Kearns was the trader, the 20-year-old who logged into his Robinhood app one day and saw that he was negative like $700 and some thousand. It was like some kind of glitch with the app. It was incorrect. He reached out to Robinhood support. They didn't respond in time, and he ended up unfortunately killing himself because of this. And he first asked the Robinhood CEO about this, and they said that they made a bunch of fundamental changes. And then this representative ended with a mic drop moment where he basically said, well, let's say we're the Alex Kearns of today running into, some situation like this. Here's what would happen. Called customer support, showed the phone, and it was, goes through the main menu of customer support, and then the call just ends. And he's like, need I say any more? He was done. So overall, we understood the situation here a little bit better. Not surprisingly, we didn't get very many admissions of anything. We didn't get tons of in-depth answers, but we kind of got a better idea of the people involved, if you ask me. And I feel it was worth watching through, and interesting nevertheless. So yeah, that's going to do it.